The clock is ticking. And if you're a Nationwide member, or you've been thinking about becoming one, there is a very real window of time right now where you could claim a straightforward £100 bonus. No catches, no hidden fees, no complicated investment required. But this window won't stay open forever, and most people will simply miss it because nobody told them it was there. So in the next few minutes, I'm going to break down exactly what the Nationwide Fairer Share payment is, who qualifies, how to claim it, and crucially, why this is actually worth your attention even if you're not usually the type to chase bank bonuses. Let's get into it. First, a bit of context. Because to understand why this matters, you need to understand what Nationwide actually is and how it's fundamentally different from every other major bank on the high street. Nationwide is not a bank. Technically, it's a building society. And that distinction matters more than most people realise. A traditional bank, Barclays, HSBC, NatWest, is a company. It has shareholders. Those shareholders expect returns. And so the business is structured, at least in part, around generating profit for those shareholders. Your money comes in. Some of that value flows out to investors who own the company. Nationwide doesn't work like that. It's a mutual. It's owned by its members. The people who have current accounts, savings accounts, and mortgages with Nationwide, they are the owners. There are no external shareholders waiting for a dividend. And because of that structure, when Nationwide performs well financially, when it makes a surplus, it has a choice about what to do with that money. It can reinvest it, it can improve its products and services, or it can share it directly with members. The Fairer Share payment is that last thing, a direct cash payment to qualifying members, because they performed well, and they decided to pass some of that on. Now here's where it gets interesting. This isn't the first time Nationwide has done this. They launched the Fairer Share scheme previously, paying out £100 to eligible members. It was one of the most talked about moves in UK personal finance in recent years. Millions of members received the payment, and plenty of people who weren't members at the time quietly wished they had been. The question now is whether you qualify, and whether the window's still open. So let's talk about eligibility, because this is the part that trips people up. To receive the Fairer Share payment, you typically need to hold a qualifying Nationwide current account. And matey, this is the bit most people miss. You generally need to have been a member with a qualifying product before a specific cutoff date. It's not something you can sign up for the day before and instantly receive. Look at this. The eligibility criteria have historically required membership before a set date earlier in the year, which means if you're watching this and you're not yet a member, time matters. Most people don't realise that the qualifying window closes well before any payment date. By the time it's announced and widely shared, many people have already missed the cutoff for that particular payment cycle. This is exactly why I wanted to make this video now, not after the window closes. Now. But here's the question worth asking. Is a £100 bonus actually worth acting on? Let me be direct about this. On its own, £100 is £100. It's not life-changing. It won't retire you. It won't solve a serious financial problem. But, and this is the part I want you to think about carefully, it's the context around the £100 that matters. Because the question isn't just about the bonus. It's about whether Nationwide, as your day-to-day bank, is actually a better home for your money than where it currently sits. And for a lot of people in 2026, the honest answer is yes, possibly. Nationwide's FlexDirect current account has, at various points, offered some of the highest interest rates on current account balances available on the high street. At times, significantly higher than what most people earn in a standard current account elsewhere. On balances up to a certain threshold, that interest rate has been genuinely competitive. That means the £100 bonus isn't a standalone thing. It could be the beginning of a relationship with an account that actually works harder for your everyday money than what you're using now. Here's what I mean by that. The average UK current account earns essentially nothing on the balance sitting in it. You get paid. Money comes in. Bills go out. Whatever's left earns close to zero. Day after day. Month after month. Now imagine that same money earning a meaningful rate of interest. Even on a modest balance of £1,500, Archie, which is around what many working people keep in their current account as a buffer, a competitive interest rate adds up over the course of a year. Not dramatically, but noticeably. And when you combine that with the one-off bonus payment, the total value on offer starts to look a lot more interesting. This is where things changed for a lot of people who switched. Because there's a pattern I see all the time in UK personal finance. People stick with the same current account for years, sometimes decades. Inertia is powerful. Switching feels complicated. You worry about direct debits breaking, standing orders getting lost, payments going to the wrong place. But here's the truth. The current account switch service, CASS, makes switching remarkably straightforward. It's a free service. It moves everything over. Direct debits, standing orders, incoming payments. All of it redirected automatically. If anything goes wrong during the switch, you're protected. The whole process typically takes 7 working days. From opening to fully switched. 7 days. And yet, a huge proportion of UK adults have never switched their current account, even once. Even when staying put is actively costing them money through lost interest, missed bonuses, or simply inferior service. The fairer share payment is, in some ways, Nationwide's way of saying, we want members who are actually engaged, who use the account properly, who see value in what we offer. And the members who respond to that, they tend to end up better off. Let me give you a straightforward breakdown of how this actually works if you wanted to take action today. First, check whether you already qualify. If you have a Nationwide current account that was open before the relevant qualifying date, you may already be eligible for the next payment without doing a single thing. Log in, check your account, look for any communications about the fairer share payment. If you're not yet a Nationwide member, the question is whether it makes sense to join now. Given the eligibility cutoff structure, you'd want to check the specific dates currently in effect, because those details change with each payment cycle, and I want to make sure you get the most accurate information directly from Nationwide, rather than relying on figures that could shift. What I can tell you is this. If you're going to consider switching anyway, because of the interest rate, because of the mutual structure, because of the overall product, doing it sooner rather than later maximizes your chances of qualifying for the next available payment. Waiting costs you optionality. And optionality in personal finance is always worth protecting. Now, a word about something broader. Because I don't want this video to just be about chasing a bonus. The Nationwide Fairer Share Scheme is actually a really interesting example of a concept that doesn't get discussed nearly enough in UK personal finance. The idea that where you put your everyday money matters. Most people treat their current account like a utility, a pipe that money flows through, in and out, nothing more. But the institutions you bank with, the products you use, the structures that hold your money, these things have real implications. Some banks lend your deposits to industries you might find uncomfortable. Some have fee structures that quietly extract value from customers who aren't paying attention. Some offer genuine value. Some don't. Nationwide's mutual model is genuinely different. Not perfect. No institution is. But structurally, the incentives are more aligned with members than with external shareholders. And in an era where trust in financial institutions is not exactly at an all-time high, that alignment matters. At least it should. The numbers in this story are not the most dramatic we've covered on this channel. £100 isn't a pension. It isn't a stock portfolio. It isn't years of compound growth silently building wealth in the background. But here's what it is. It's free money, legitimately available, from a financially stable, member-owned institution, for doing something you should arguably be reviewing anyway, where your everyday banking sits, and in a financial landscape where the cost of living has reset permanently upward, where every pound matters more than it used to, where people are genuinely looking for any edge they can find. Ignoring a straightforward £100 because it seems small is exactly the kind of thinking that, repeated across dozens of small decisions over years, adds up to a meaningful amount of lost value. Small things compound. That's true of investments. It's true of habits. And it's true of decisions like this one. So here's what I want you to take away from this. If you're already a Nationwide member, check whether you qualify. Log in. Look for the fairer share payment in your communications. Don't assume you'll be notified automatically. Be proactive. If you're not a member, do the maths. Compare what your current account is actually offering you in terms of interest, features, and overall value against what Nationwide's FlexDirect offers. Factor in the potential bonus payment. Make a decision based on the full picture, not just inertia. And if you decide to switch, use the current account switch service. It's straightforward, it's protected, and it takes less time than most people think. The financial decisions that change your life aren't always dramatic. They're not always about the big investment, the career change, the property purchase. Sometimes they're smaller, quieter. A switch made on a Tuesday afternoon. A bonus claimed before a deadline. £100 that arrives because you paid attention when most people didn't. Pay attention, the window's open, for now.